First, thanks, David, this morning for the introduction. I want to declare that I'm by no means an expert in as you saw the sums that Peter put up, in the carbon space and how you calculate it. We've had a journey since Paraway started about looking about what we can do different in agriculture. So that's how we ended up partnering with a mob called Natural Carbon to start our journey. I thought I'd start this morning just by giving a little bit of an introduction to our journey, a little bit about the emission reductions fund journey and some of the exploration work we've done with Peter actually at the original start back in 14-15. Thought I'd talk a little bit about the alignment to our business and what it means for us, a bit about how we go about the measuring, some key points we've found on our journey with ERF, the benefits to our business, to our organisation and to some of our key stakeholders and our investors in Macquarie, and then touch on the learnings and opportunities with it. Paraway is a subsidiary of Mira Agriculture, which is Macquarie's vehicle for an investor fund portfolio for people to access the Australian agricultural sector. Paraway is a red meat fund that sits under the Mira banner. With it, the Mira platform has three main entities in Australia. It's got the Macquarie Pastoral Fund, which manages Paraway us. It's got Macquarie Crop Partners, which looks after Lawson's grains, and another organisation in Brazil where we lease some country, and then the newly formed one you would have seen in the papers recently, Viridis, where we're dipping our toes in the water with avocados. History of Paraway. Paraway started in 2007 with the acquisition of a couple of properties in New South Wales called Pudginook and the Bulls Run. That was the start of the fund capital raising venture by Macquarie. Continued, and then that fund then was managed under Macquarie's Banking and Financial Services. In 2012, we moved out of banking financial services and aligned with what's called Mira, Macquarie Infrastructure and Real Assets, and was just more aligned to that asset class with it. And then 2015 we had a fund roll. So at the start of the Paraway journey, it was a closed-end fund, 8-year fund, so it meant that in 8 years investors decided whether they sold or kept going. You can imagine the turmoil in an organisation like ours when it started in 2007. We had Macquarie people overseas raising capital for us to buy properties. We got to about 2009-10 where the aggregation was big enough to leverage, and we sort of had 4 or 5 years to run then for this end of date. So when you talk about setting horizons in agriculture, it really limited our ability to focus on the genetic gains, the things that were going to be long play in ag, were difficult for us to focus on. We had pressure from Macquarie and the board to show our investors that you could produce cash out of agriculture. So, you know, with the climate volatility we're seeing at the moment, we also experienced in that journey a few dry years, which made it difficult. So 2015 saw the fund roll. Investors voted on a evergreen fund, so there's no close date for the fund now. It just has these 5-year trading windows. So every 5 years we can bring in new capital, or if people want to elect to get out, we can bring in capital to pay them out. So it's then let us reset, I guess, our focus and let us get focused on some of the long play stuff in ag. So it's a little bit of the history. The company split up into 4 regions. So we've got the southern New South Wales region down the bottom there. That's mainly a sheep asset. Properties in Victoria and the Riverina. The 2 middle ones are our sort of Angus and sheep operation in central New South Wales, ranging up to Armidale, so basically all Angus, and then the northern sector, which is the Queensland border up. So that's it. At the moment, We've got about 4.5 million hectares of this beautiful Australian landscape under management, which provides plenty of questions. When you know, we talk about the carbon space, what's the opportunity? There's a lot of country there. At the moment we're running about 220,000 head of cattle, producing about 30 million kilos of beef annually. We've got about 17,000 hectares of dry land, cropping, and there is some irrigated as well. The cropping assets were picked up with a lot of the sheep assets that we bought in New South Wales. Currently running about 250,000 sheep that are producing about 1.5 million kilos of wool, and we sell about 170,000 sheep annually, and then there's a little bit of irrigated stuff. So that's a bit about Paraway. Why are we here today? I think we definitely you know, saw the opportunity. We started working with Peter back in 14, I think it was, Peter, exploring the savanna burning opportunity for us. And again, you know, Peter mentioned some of the baseline stuff that happens there. When we started looking at that, a lot of our baseline measurements didn't let us sort of capture the availabilities that were there. So we left that, and then along our journey, the beef methodology opportunity came up, and we partnered with Natural Carbon. You know, I think the one of the benefits for us was the fact that we believe that, you know, the methodology actually spoke about the principles in the business. So, you know, it was about us being able to demonstrate some of the advantages of reducing turn-off age, you know, getting unproductive animals out of our herds, and that sort of gave us some alignment that made sense to us. The other thing about it was that we, you know, Peter mentioned the social licence part of it. I think, you know, we've got an investor base that a lot of them are from Europe and want to know what we're doing in this space. So definitely an alignment there for us to prove to them that we're proactive about it. The project that we were contracted was in 2016. Whether it covered 10 properties from Queensland to New South. That included 110,000 head of cattle. So I think Pete mentioned this before, you know, all these projects talk about baseline measurements, but actually where your three-year historical baseline sits and how do you get there. I think fortunately for us, we'd been doing a lot of work benchmarking with Phil Holmes at that stage before we met Peter. So we had actually converted our business into a kilo business. Everything we measured was in kilos, and we've been doing that for a 3-year period before we started. So for us, Paraway gave us an opportunity to have a baseline measurement that we could step straight into to the beef herd methodology project with. The alignment was with about the sustainable land management. I think, you know, as producers, you know, our objective is to turn grass into kilos of meat. So you know, you can't do that when you don't have grass. So I think the alignment there meant that the better we manage our grass, the more kilos we could produce on an individual animal basis. I touched on the beef herd methodology. That's why we chose it, and then the alignment then with the principles and Natural Carbon made it successful for us. And I think, you know, to date we've had a journey with Natural Carbon that's been really proactive, and I think to Pete's point about finding someone to partner with that can help you through the quagmire of detail that sits in underneath the devil, you know. And I heard a good quote yesterday, and it was sort of, someone said it's easy spoke, but it's a damn lot harder saddled and rode, and I think that applies very much to the fund. I think this is a key point, you know, like one of the things that when we sat down and started talking to Natural Carbon about why we wanted the partnership, I mean, you know, who doesn't want to increase productivity? So it's a catalyst that lets you, you know, review your business, and I think from that review for us, definitely let us fast track some of our opportunities we saw. We had another foundation to go to our board with, and so that we want to make some changes. And scale was a benefit for us, right? We operate in especially in Northern Australia, in a very extensive program. So, you know, we had a lot of businesses that naturally had opportunity because of the scale of the paddocks and that sort of thing, where we could easily invest, subdivide, add water points, get better pasture utilisation, convert that into animal performance with us. So I think that was definitely sort of part of the benefit of us partnering with Natural Carbon to help get that across. One of the key things about it was actually you've got to identify a change practice or a change management strategy, and I think there's, you know, some of our learnings along the line I'll talk about a bit later on, but it's definitely one of the things that you've got to have in your mind, that it's a positive type of action that you want to get done in your business. For us, you know, we've increased herd efficiencies through our kilos per AE. We've been measuring that now for 8 years, so we've got, you know, got that on an individual animal basis, and then we measure our breeder efficiency through kilos weaned per retained breeder. So basically that's just another methodology that was picked up out of some of the MLA research and comes from the cash cow project that was run quite a few years ago. Some of the structure with it. So there's a lot of zeros up here. There is no upfront cost for us with our partnership with Natural Carbon in this RF project. However, there is a cost. So you'll see down here that 25% of the sale price goes to Natural Carbon. You'll see the insurance that Peter talked about, the $1 per carbon credit unit into corporate carbon. That's our insurance. So if we get a wipeout with droughts and we don't produce any kilos for the year, that covers us. We don't have a deficit to pay for or look for out of the Paraway business. I think, you know, I think that there's a lot of work in getting to this stage. I think it's 25% of Natural Carbon seems a lot of a percentage, but there's as Peter demonstrated, there's a heap of work goes into this where the partner will help you get to what you're doing. So measuring the project, we started off in 2016. We abated 22,604 tonnes of CO2 equivalent. So again, that's the maths that I know nothing about. The expert's sitting over here, so questions later. Peter, not Jeffrey. To the 2017 was 39,238 tonnes. So I think, you know, they're all numbers and good to see on the screen. How do we get there? So I think, you know, for us it was about, and we'll hear Stu talk about the good old AE debate later on this morning about actually how do you know, there is some debate around converting AEs to kilos in your business and what is an AE and then how does that convert. But as I said before, one of the advantages for Paraway as a business was the fact that, you know, we had been doing a lot of benchmarking prior to this and converted our business and were measuring in kilos. So it made it a lot easier for us to step into this. There is a time factor to it. We spend about a week, excuse me, just collating data for Natural Carbon, and then we spend about another week in reporting. There's quarterly reports, updates on your management practice and that sort of thing that go to Natural Carbon. So all in all, it's about 2 weeks out of your year that's dedicated to this project. I just thought I'd put this sheet up for you just to give you a little bit of an example as one of the tools that's used with Natural Carbon to convert the number of head into kilos. So this is the number of head that run down here. There's a kilo per head attributed to that. So part of the requirements are that we have to weigh 12% of the herd. So each one of those gets truthed. Then it's a simple stock return. Then it's just opening balances plus purchases plus births minus deaths, sales and transfers out. They're all done in a kilo, and then at the end of the day, we end up with a number in here which tells us how many kilos that we've produced for the year. So that's the sort of template that we're using to help us calculate it. I think some of the key points that I'd like to touch on out of it is the alignment part with the management practices. So you know, we heard Pete mention before about the you've got to either demonstrate. I think there's 4 key things, Pete, isn't there? In there, you've got to be able to demonstrate taking an unproductive animals out. You've got to be able to demonstrate reducing age of turn-off. You've got to be able to demonstrate you increase kilos per AE out of your business. So there's some of the metrics that are used. When you partner with someone like Natural Carbon, you've got a 12-month period to implement and prove your new practices. So when you go into the partnership, you'll have decided what they're going to be. You've got 12 months then to demonstrate and prove that they're there. I mentioned this before, in the event that there's a reduction in animal performance, there's no subtraction, or you don't get a bill from corporate carbon saying you owe us. That's what the $1 per ACCU covers for you. And thanks, Peter. I didn't actually know it was called that till today. So it was an ACCU. The no external fees to external pays, no upfront fees. Yes, there is a fee for being in these projects. You've got to pay someone to help you get through the quagmire of data that's required to get there. Touched on the insurance, and then the 3-year historical data set. That's the baseline bit. They're the key bits. You know, I think this comes back to the age-old if you can't manage what you don't measure sort of philosophy. So fortunately for us, we've been doing a fair bit of measuring. There's a little bit of additional weighing that's required. Any new management practice or change usually requires some sort of extra activity, so it's not that arduous. The benefits for us, definitely, I think the social aspect of some of these projects, and we've mentioned, Pete mentioned in his talk, the pressure that we're getting from our community, from excuse me, from our peers, that we have an obligation. Richard Norton, rightly or wrongly, on behalf of the industry, produced a target of carbon neutral by 2030. So we've got an obligation to get there now, and projects like this go a long way in helping us get there. I think the monetary value of all this. I think the fact that we've been on this journey now for quite a few years. The reality is that 110,000 animals that are in this project, abating the 39 odd thousand tonnes you've seen. The return on capital to us has been about 0.1%. You saw, I don't know if you remember seeing Peter's slide with those numbers about the number of head in the herd and how that related through to units, and ours is very aligned to that. So I think that gives us confidence that we're in the right space there. I think some of the learnings for us is this baseline measurement bit. If you don't measure, you can't manage. So that philosophy let us get our foot in the door. We've been able to demonstrate our individual animal performance to our peers, to our investors. We sell kilos of meat, so I think it makes sense to start measuring business performance in kilos. So we made that change back in 2013. Takes time to collate the data. Like there is a cost to it, and you've got to make sure that you afford yourself that time. And I mentioned before that there's a lot of forethought that is required to go into what management practices you want to implement in your business that makes sense, and I think they're probably the key learnings for us. The other one is it's a win-win. It's a great partnership with Natural Carbon. We get to leverage the carbon market. We get a social story out of it. Natural Carbon get to take 25% off us for the work that they've done. So I think it's a win-win in that way. Opportunities we see, I think this landscape's growing. The carbon market, the carbon opportunity is huge, and you know, as managers of some of the most unique land assets in Australia, there's huge opportunity for us. You know, you think we've got 4.5 million hectares. You know, what can you do with that? I guarantee you we don't use every hectare we've got, so there's got to be opportunity out there for us that we need to keep looking for. And this, you know, goes hand in hand. You know, a lot of our budgeting processes now, we're starting to explore and look and see where we can plan to create carbon offsets in our business. I think it's, you know, the thing about it is that it's the beef herd methodology, you know, has definitely got positive environmental outcomes, and it's also profitable to the business. So I think that's a you know, a part of the win-win. We've mentioned the social licence. The other thing I'd like to just extrapolate on a little bit is this stacking projects and the collaborative stuff you can do. We've just put Rocklands and Tambar into a collaborative project in which we're going to wear the expenses so that other smaller producers can bring their herds in and have this collaborative part and try and grow another 110,000 head type fund with external people. So I think that's, yeah, part of the big opportunity that's going to start coming in this space once they work through some of the measurements. I think in closing, I just want to leave you with some four key messages. You know, you can't manage what you don't measure, and I think that's really key for this space. Is that you've got to be able to do that to get your baseline measurements. There's opportunity out there. We as an industry have got to seek and find what that opportunity is and how it relates to our businesses. I think this comes back to our story, our sustainable story in the beef sector in Australia, and you know, these type of projects help us gain credibility, and at the end of the day, yeah, they're profitable projects to be partnered with it. So with that, I'll leave all the questions up to Peter.